Good people, how are you? Yep, it's the Crypto Sniper, Little Red Riding Hood at your service. So what are we looking at here? We're looking at a very good structure for upside continuation for Bitcoin. Wait for it, 50k run in terms of my opinion coming up in the not too distant future for Bitcoin. Yay! Some of you may say, well, we hope to be right. We aren't always right, but we hope to be right. I think it'll be good. So predominant bullish bias is there in spades. So a couple of things to bear in mind. Overall volatility is calming down since our flash crash. 25.7% down is the new 38%, as I've said before, and I'll say it again. This clears our head for what should be potentially 150% to 200%, maybe even more, because I am larger bull. I'm expecting this bull market to supersede the previous bull market because of what I've explained before, but I'll quickly do a minuscule sketch again. The fact that we are starting to hit the meat, the highly steep part of the normal curve. So if I do something like that and just do a quickie little illustration, if this is the adoption of crypto into the world as an investment, your median man is on the zero mark here. Here's your pioneers, the cypherpunks, etc. Here's your little old lady that still has a savings book and doesn't understand anything and has never used internet banking and is 93 in the shade. And you are somewhere here in the early adopters. So you're not a pioneer, you're not a coder, but you're in the early adopter segment. And what's actually happening is we're starting to get the beginning of family offices, small hedge funds, some corporates deciding treasury function, Michael Saylor, etc. And we're getting to this part where the ascent curve of volume of new money, and this is going to create the biggest move in price. The highest acceleration in price doesn't occur here because you've then got 50% of the money already in there. And that means there's quite a lot of people that are already on one side of the boat, and some of them will be getting out every now and then. So you'll have 50% still to get on, some of which may never get on because it's just too crazy and they don't have internet or don't want internet, and the rest. So this area here is the parabola of price for adoption. So in my worldview, we're actually going to exceed the previous halvening cycle. You know, when so many of you have seen the charts of the previous halvening cycles, and I actually think we will exceed it most of the time, not necessarily 100% of the time. And I think we'll even challenge the first halvening cycle, and in parts will exceed that, possibly more than many of you think, because of the acceleration. I've not drawn this in the most parabolic way, but you could actually have it more like that. In other words, the ascent is super steep. That line of efficiency we talk about in our trading, well, the steeper that gradient, that's that just much bigger wall of money that still has to come in than that compared to that which is already in. Okay, enough of that preamble. I did also point out, I think this was somebody else's work that I just took a screenshot. So over here, this was somebody else's tweet. Credit to him. Sorry, don't know, didn't grab it at the time, but it's not my work. 38% corrections, and then what tends to happen is you're averaging 150% as a whole in the 15, 16, 17 bull market. I think you're going to exceed that. I think we'll probably average higher because of that normal curve that I've just shown you now. So what does that mean? From those depth lows of 38, I'm saying 25 is the new 38. So because of the dip buying that's continuing, so I'm saying no more 38, 35, 25 is the new 38. Most of these, there are quite a few 38s, and I would argue the average, you've got a slightly smaller one at 29. That's just as you were going parabolic. So they're a little bit smaller. Many more people didn't buy the dip pump. So the dip will get smaller as more and more people are squeezing in, and the more parabola. But the parabola is the end. This is the beginning of the end. So having good dips, not a bad thing. So you've got all these dips here highlighted in blue. Now I'm saying we'll get something similar. We've probably just had our first meaningful one now. At 19K, we had a little bit of a wind up pretty much here. That was our 19K. This was our 42K pullback. So actually, if you're asking me, Sniper Sights with the TG Pink, what else? What else, I ask? My take is something like you are here. And draw it, thinner line for the sights, and you are somewhere here. Now the difference is in those legacy moves, you just had a very basic charting formation. You'd go up, all-time high, up, all-time high, up, all-time high, up. As I've explained, this structure is very technically different, and it's another reason that supports why I think we'll be stronger, is we had this monumental continuation pattern. So we had the 20K run, we had the echo Bitcoin bull that died at 14K that we were the first to call and say this is going to be a macro continuation, it's going to top out here. And we then called that at about 10.5K a downside. And then you get the third. Only in our case, we had the coronavirus dip that brought you down a little lower, quite a bit lower, back into the sub 4Ks, and then you sat here. So this is all, let's draw that nicely, all these scribbles, they're so messy, into a far larger, on the big time frame, continuation structure. So this is going to have huge overperformance, and people are going to sell too soon. Almost invariably, you're going to sell too soon. So a lot of little confusing scribbles going on there, but the net effect is we're going to have 25s now, generally. That's a generalist statement. You don't get to kill me because you have a 28 or a 22. Okay, so that's the aggregate. In the same way, the aggregate upside was 150. I think we're going to be on the high side of that. And I think after our first big correction, you could have quite a substantial move. So you could have 200%, possibly 250. So where does 200% take you? When the low was, let's call it 30, it was 30,400-ish. and dollars, but let's just say it was 30. If you do 200% on that, you're going to get another 30 and another 30 again. You're going to find yourself banging on the door of 90 on a 200% move. You'll find yourself on 75 if you get 150, which was the aggregate of the average of the previous bull market, and you'll find yourself, if you do 250, slightly spectacular, and that brings you in the normal curve. Why that would be, you find yourself knocking on 105 and through the 6 digits. That doesn't mean there aren't corrections along the way of 5, 10, 12 and even 15%, but the big major washout of leverage corrections will come. So please understand that, and that doesn't also mean you're at 100 next week. Okay, now this for me is in a breakout, so I need to explain to what's happening here. We were talking about it and updating the community on that, talking about it in the community, and this is a very interesting structure, and I'm going to explain to you why and how. Let's just remind you on a slightly bigger time frame so we don't get too much staring through the keyhole. I've got a bit of volume in there. This is your bull market. That was the last time you pivoted really strongly long. It was a key inflection point. You're currently getting another right here, but you're going to get another opportunity on your key inflection point, and I'm guessing it's going to happen around 38. So I'll talk more about that in a minute, but just to understand, that was at 19, just over the 19s, and I'm busy calling you the next one at 38, and you've done 100% on that before you got your first major sell-off. It's not to say this wasn't significant during this 19K period, but it wasn't quite of the same scale. You can see it in the volume, the panicking out. It was significant, but you were in and around the 19,400. You're in and around the 19,400, and you fell back down to around the 16,200. So you had about $3,000 on 19 and a half. Not quite a sixth. Now, sixth is, what's that, about 14, 15, 16%, 16%. Significant, but not 25.7. So this is part and parcel of what I'm saying. Reduced scale of pullbacks. This volatility is coming down, which is great. So what are we calling? What are we calling? Well, you're in a macro. You're in a macro. So this is why this is such a key event, and you guys are going to make Tom here if you play your cards correctly. We're in a macro. Be bullish about Bitcoin. I can't continue to say this more strongly. And if you want to join our community, by the way, where you'll be getting live real-time updates, by the time this Camtasia is finalized, God knows where the markets will be. But we're in a macro squeeze here that is going to see rapid over performance here, and you've got a nice little squeezy, and we talk about the second most important HVF there, that literally you've just gone wham from there. So you're in a squeezy. This is your grand macro continuation pattern that most people are not familiar that we're even in. And as I say, this was the point where we realized this was going to be an echo bull. We had a lot of resistance here at the 14. We said it's not going to continue. We're going to have down leg. Okay, now you are within that, having made this initial target, now in an overperformance period, which can go substantially for an extended period. Again, refer the normal curve and the adoption that's got to happen, the whole financial system. It's interesting, by the way, I also want to say this. Staking coins have done so beautifully well. Defi, Uniswap, Sushi, Polkadot platform coins as well, ADA, have done really, really well. Ethereum showing relative strength to Bitcoin, but because it's a bigger market cap, hasn't gone quite as much as the likes of DOT and ADA. And still a favorite for me, and we'll refer back to the Ethereum BTC in a minute. Still one of my favorite key trades, easy liquidity for leverage trading. Remember, we're talking about leverage trading here. We already invested. We're not divesting for anything. And we have our cold pot, no leverage. We have our lukewarm pot, and we have our hot pot. You'll learn more about these principles, if you wish, on a program. Okay, but so what's actually happening here is you're getting another squeeze, which we are calling for upsize again, and we're saying likely to run the 50K. That's going to be super significant. From 10K, the next most significant number, apart from maybe 20K, is 50K. And then it only gets superseded by 100K, which is only superseded by, a million. And we've got a bit of peddling to do before we get there. Okay, so, but anyway, we're on our way, we're bullish. So this is a particularly key moment for folk that know what they're doing, want to take small nibbles to be bullish to the upside during this period. This structure is perfect for upside. The gift of the terrible sell-off is that it's going to give a nice strong amplitude according to our HVF method that will project from roundabout, if we're projecting 37.5, 38 through deep into the 48s. I can't see, if you're running 48, not running 49 and sniffing at the 50. It doesn't mean you absolutely guaranteed break the 50. I know I mentioned that as a distinct possibility. No one knows anything about the future right now. We're talking about possibilities. Some things are more probable than others. But the target for this structure is going to be in the 48s, in my opinion. So let's analyze it lower down time frame. So down we go. So we understand where we're coming from. Always do top-down analysis when you're doing charting. Start on the big time frames, bring it back down. So you've got to remind yourself which country you're in before you start talking which street name and which house number. And it's kind of like that on Google Maps too. You always come in and see the globe, or whatever it is, and drill down until you get into the country, the suburb, and the street, the province, etc. So what's happened? Well, this has happened. So I'm doing an overlay draw. I've got lots of bespoke lines on here that will overwhelm. And this is a falling wedge for me. And squeezy, so Japanesey in TG Pink. Look at you go. And that is a wedge break right there. So that was a key inflection point that you just missed. Yep, you missed it. Or maybe you took it. Well done if you did. It will do the sides in blue this time because everything's TG Pink right now. So that was a key inflection point. An opportunity for a break. But there is a bigger, better one with even tighter risks still to come. And I'll give you a little bit of an idea of what I think it's going to do and how it will come about. So that was a break. Now, what typically happens with a wedge that makes these kind of entries a little bit more tricky is that you can get a little bit of a return move. Could do that. And then up she goes. So I'd be looking for this high to be taken out. You can horizontal lines, and then take him out. And then a little bit of a rest, goof off. But I'm expecting the buying to come in a bit steeper now. We've had our panic. People have burnt their fingers. We got reflated quite quickly. There was also a bit of wedge structure here, by the way. You could have seen that. You might not have, but I'll show you anyway. Squeezy, squeezy, Japanesey, up she goes. And that, of course, gave you, on top of that overlay, let's choose a different color, some structure here, which showed a very steep grind line like that. Boom, you'll learn about grind lines. Book a call below, no obligations, have a chat. See if it's for you. And there's self-study options, which are more affordable as well, available. Grab the mini-series if you have no money. It's all good. Get value, do what you need. Build yourself up. These are the times. These are reset times. And this is great opportunities for people to build their wealth. That can probably keep some wolves at the door. And believe you me, the wolves are gathering. Indeed they are. Okay, so after this, a potential high, I'd see it probably go around about the 38.4. This is a bit of a technical level. You'll note key levels, jump. Let's grab an orange, maybe different color. A bit of a fractal head and shoulder that we did have when we sold off Mark II. And that is running through that level that I've naturally drawn there. And I'll tell you round about where it is. And these are simple principles of key levels of significance that you will also learn on a program and a course, how to do it. I can show you them, but that's throwing you a fish. You can learn to fish for yourself and actually have the fellow fishermen alongside on the beach giving you guidance. Isn't that awesome? Lots of people all doing the same thing, no herding cats. So this was a head and shoulders, and what's that value roughly? Let's have a little peek at it. So that value is round about, I call it at the 37,900, 38,000. Should throw the 38,000 on there. I've got all these lines drawn on. I'm just leaving the I off. I don't want it to get super confusing for everybody to have too many annotations on. So 38K is no surprise a key level, key round number. And we draw it. Let's put it at slightly higher. That was the 38. Whoops, again, leave the I out, draw it with the other one. I think I've kind of drawn it on the right place. So I think we just get above, we sniff 38. That means we probably put a nose through, but not too much more. It would be great if it goes a little higher, 39. We might have what I call a very ascending structure, which means a steep byline. And I think that is a distinct possibility, even one of my favorite options, which means the line that is coming up under these lows actually accelerates a little bit like that. So you may not get an entry low down as low as you think, but you might get that pullback. Patience will get you in. Entries matter, so don't chase in. Look to pick it up on return move. So that 38K was that kind of head and shoulder there, which did clearly perform because you topped out just through 40. Note how we just touched 42. This is just 40. These are key round numbers where we thinned out the people who are sellers at those prices. 42 and just through the 40, and then 38 neckline. So we didn't have too much time above the 38. There's your iceberg that managed to stay above the waterline of 38. And so great opportunity to collect a little bit on a return move. Where's that second key inflection point coming? In my worldview, it will come here. Once you bottom out, let's say you bottom out on that grind line and you start to go, we'll go low vol. Watch this. This will drop. It will be dropping and calming. There'll be buyers coming up underneath this. It will steepen a little bit possibly, which is what I call an ascending structure. You'll end up with another macro on the 30-minute, that is, if we can call it macro, compared to the 5 and 10. I suppose it is, but it's not really a macro time frame, is it? We'll have another structure that will be, and I'll make it fatter, just so that it's simple, childlike, crayon draw, like this. And so once you go real quiet, somewhere along the line here, where we're in the blue zone, you'll go a little bit quiet, dot. You'll get your final in the pink. TG, please, only best pink for us. Bang. You get your final, and this will give you an opportunity to get leveraged with tight risk. Not a recommendation. Most people shouldn't train any form of leverage without prior training. We do such training, and we do it to a high degree, and we fascinate about it. Others may do too. We think we're awesome. We would say that. But you're welcome to try anyone else you trust. If you don't know what you're doing and you get too big, you can get first positive enforcement for negative behavior before you will be killed. But killed you will be. And it's just a matter of time. So money management, learning to take small losses, super, super important, especially when you go to leverage. You've got to earn the right to leverage. That's why training is required. Anyway, so with that flight trajectory of the price, if it does do something like that after a little return move, then work its way off, you will go low volatility. You'll see it over here, and you'll get that opportunity. Your stop can be placed somewhere here. And if you get an even smaller relative low, you might be able to squeeze it a little tighter. Increases your risk a little bit. Sometimes when you break, it looks the other way before going in the initial direction. A little shakeout of final loose hands has a little sniff left before it goes right. Be careful. Little look down before it jumps up. But other than that, if you think you know enough, you've got yourself a free trade. And if that moves as expected, you're going to go deep into the 48s, I think. And possibly with a little bit of overburn, you're going to test or sniff around the 50k line. You might be lucky enough to close through it, but I will have true geometry, we'll have actual targets. We'll close the bulk of our position at that target, and we might leave a little bit on for a little bit more to play along. But remember, this is part of blue pot, orange pot, and red pot strategy. You need to understand the varying leverages. You can use 10, 20, 30 on your red pot. We typically use 50%, double, maybe 2.5, not much more than 3 on our orange pots. And believe you me, it's very important that when you, if you ever happen to be wrong and you have to jump out in a falling market, and then investment just reinflates with Bitcoin going back up, and we sit it through. We're not jumping in and out. It is not a short-term trading pot. It is baseline, and we tax down. Okay, so giving you a lot of information there on Bitcoin, how to trade it, key information coming. I think this is going to be a great week. It's going to be a great week for crypto. However, Sunday, weakness on gold and silver may initially pull it down. I've spoken about a little bit of the correlations there as the anti-fiat. Gold's weakness did affect Bitcoin. For very few talk about this technically. But the key thing is gold will react quicker to interest rate changes and pricing in the dollar index. This is something we also watch, hence why we've got 360 degrees in a circle. Come on, man. Where are you from? Anyway, so yeah, so gold, let's put him on the bottom. There he is. Whoops, I took my Bitcoin chart away. Go back up there. So what we were saying on that front, you started to sell off around the 6th of Jan here. Whoops, let's close that. Let's keep the eyes off because it just gets messy. That's on a 2 hour. We put this on the 2 hour as well. Let's put it on the 2 hour. So what you might see is around about the 6th of Jan, which happened here, Bitcoin kept trucking. Don't say that when you're drunk too many times. Gold was nice and bullish, and Bitcoin came up and went up with it. So that's the 5th of Jan, up. Then gold got a push down from the 6th of Jan. Bitcoin continued up. So it had its independent strength. They were diverging at that point, right the way through to the 7th. Through to the 8th, and then hang on, at the 8th it suddenly got a little bit of a wobble. The second leg that started for gold spilling from the 8th was quite destructive. You got quite a few schizophrenic sell-off days there. You bounce back up and you sold off there again. But still, the people came in on the dips and took it back up. That occurred during that little flat period when gold was kind of holding its own, but not doing well. Then gold continued to spill over here. Remember, this one doesn't have weekends on it, while Bitcoin does. That's why I can't line them up perfectly. 08, you see, that's 08. I've got a little bit out of shape there. That's 08. When you started to go down here in 08, that was when you went down there. Then when you started to go down all the way through into the low at the 11th of Jan, you can see 10th, 11th coming in here. Bitcoin started to sell off too. Bitcoin started to sell off too as you went into that low. So there has been a correlation. What did that have to do? A bit of strength in the dollar, which will affect gold strength, of course, and it will affect, to a degree, crypto strength, because it's Bitcoin against the dollar. There is another part to that. It's the dollar. Most of it is about Bitcoin strength, but occasionally when Bitcoin's just idling its way up, if the dollar gets super strong, it's harder for it to continue that climb. And of course, interest rates expectations, which we've seen. So in other words, the big thing is there's no real yield. There's too much debt. So little rant on why DeFi is doing well. Let's say goodbye to gold. I kind of showed you what I wanted to show you there. Why is DeFi doing so well? Staking. Got a little bit of hex for speculation on my side, but the other staking coins, Sushi, Uniswap, it's kind of like an exchange. The platforms that's seen take Ripple, by the way, market caps, we do that. No longer the Ripple, 15 billion dot. It's quite a few billion bigger than Ripple now. Everyone will say, oh, but it was just, the SEC and all of that story. I've predicted for ages that Ripple will cease to be the third biggest token. Of course, if we ignore Tether, the stable coin, it had already dropped to number 4. But I was referring to other cryptos, and now DOT is the one that takes its scalp. And actually, if you look here, 11.8 in percentage terms, with Cardano doing 7% and Ripple down 1.44. You don't need too many more 7-day periods where Cardano does 29% and Ripple does -8 before that almost 12 grand takes that 12.7 grand. So it could be very undignified falling down the ranks for XRP. So big key moment, and well done to DOT, I suppose, the platform, and it qualifies to be watched a little bit closer now. This, of course, helps Ethereum, which is also a platform, but not to the same degree. By the way, let's just remember Ethereum, whilst Polkadot's got to 15, it's only a tenth of Ethereum, which is closer to 150. So we've got to respect that there's a big difference in size. So you can't get the same percentage numbers unless you get a huge number of capital going into Ethereum, which is a very well developed, known entity for an extended period. Speaking of which, let's go to the FBTC chart then. Let's go to the FBTC chart. Reminders. We'll go to the 3-dayer and pull that inverted. We've shown you this one before. This one I can bring up the jaw. That's your head and shoulders stuff that we've spoken about. And our prediction is you typically surge with the Ethereum. Typical surges with the Ethereum. You get a lot of surging against BTC, this is, right? So we're talking Ethereum BTC. Tends to have surges, then it can drift off, and then like spike lunges, drift. That was all part of the bear market. Bitcoin dominance. We were all over that Bitcoin dominance. We warned you after running 4 that you had a head and shoulders and that you'd have a pullback. And that was your 33 line, which you've just surpassed. That took you all the way to the target of that head and shoulders, down to the 2.5s. And actually you ran low 2s here. Low 2s, and you supported in an HVF zone, which only an HVF trader would have known and had. Why don't you become one? Get these zones. Book below, have a chat, cost you nothing. Anyway, back to the FBTC. What's happening on the shorter time frames? That's a 3-dayer. Let's drop you in. This is a right shoulder. By the way, the head and shoulder target, I've already left the 3-dayer, now is 6.6%. We'd expect that to be run. You'd probably run 7% as part and parcel to that. It's a log scale. That's why it doesn't look as big. 7% of a Bitcoin will mean quite a move. If Polkadot keeps growing as a possible rival along with ADA, and Bitcoin becomes, Ethereum goes from 3.4, 3.5% of a Bitcoin to, let's say, 7%. You don't need to overrun a target much to get to 0.69 here with momentum. It's quite plausible. And by the way, when you get a reversal like this, it doesn't mean it ends at the target. It will just churn, wind up again, pull back, muck about for a while, and then on a longer term basis will probably continue to overperform later. So that can mean 10s, 15s, etc. Don't forget it's been 15% of a Bitcoin before at its all-time high. What will it mean that these others have done? Polkadot and other, for example. If platforms, more and more people have got off the Bitcoin as store of value argument, that will continue to do well. But what if more and more people are starting to realize the concept of the platforms, the applications, and the staking? Which takes me back to my whole argument, why are staking coins doing well? Because one of the key reasons, and you're going to listen to Omar Bun on Crypto News, lovely guy, very proper gent of Ethereum from the get-go. Listen to his channel, he's great on the news. Check out Alex Saunders as well. We've spoken with him. He's really, got under the bonnet of staking and those coins, tokens as well. So follow those two guys, give them a shout out from me, tell them I sent you if you aren't already doing so. They're spot on with analyzing the different tokens, and they'll know fundamentally a lot more than me. What I can tell you at a macro level around economics, my understanding is very good, and on a price behavior level, following the money, those are our core competences. What I can tell you is in the real world, non-crypto world, and I say real because it's becoming totally surreal, it shouldn't be real at all, but anyway, in what's called the real world, we don't get true interest rates anymore. There is so much debt that they've squashed monetary policy so low that there is no true saving. And the actual inflation rate, go check out Shadow Stats, by the way, is double digits for Americans. It obviously varies per person, per lifestyle. But people that, even at subsistence level, that are what I'd call working poor, are facing double digits. Soft commodities are up. Everything is up. It's a big long. Copper's up. You name it. It's up. Agris are up. Watch out for supply shortages. I don't want to go full reset on you, but seriously, food costs are going to go up. So everyone's inflation is high. That's why we're starting to see this little squeaky. The biggest buyer of all this debt that the governments are created, Biden's just created another 1.2 on top of the 900, or was it 1.1 trillion on top of the 900? That's 2 trillion. Each American gets $2,000. The rest is all these funny foundations and everything else, and corporates getting benefits. Who knows? Very stinky fish. But anyway, they're diluting the currency. They're killing the currency. And the more they create debt, the more they can't have real interest rates, because if they had a real interest rate that actually rewarded savers instead of giving them a net real contraction, in other words, what you're earning in interest relative to your personal inflation rate actually sees you guaranteed losing. That is where everybody is. So going back to crypto and staking, why are these things winning so early, so soon? The macro economy doesn't reward postponed consumption and savers anymore, and hasn't for a long, long while. People have had to substitute capital gains for yield. That's what's happened. That is why the stinky stoink market is as high and as overvalued as it is, because so much money had to find a home in a place, but not because the yields are great. Many of them don't pay out dividends, but you are substituting the real yield for capital appreciation. Because your inflation rate actually is a lot higher than stated by government stats, and as a result, there is no postponed consumption, stake, tie something up and get rewarded for doing it environment. This to me is why staking and yield is the hot area right now in the DeFi space, because you don't have one in the real world. And as Jupiter, planet Jupiter, with the quadrillions in derivatives, the hundreds of trillions in debt, the tens and tens to hundreds of trillions in market cap of global stock markets, all have to squeeze into my little round coronavirus ball. There's a lot that's got to happen. One of the earliest things is real yield again. And on HEX, for example, it'll never fall below 3.9% per annum. Now, that's still not going to make your inflation rate, but if you participated from the beginning, you'll get something. Others are giving other yields. There's a whole bunch of things going on, and this is why this is such a hot area, and that's why you should listen to Alex and Omar and everyone else with any credibility that covers the staking area. I will follow the money and I will follow the chart and slowly pick up what I can fundamentally. Anyway, so long story, but that's why that's going to be a hot area and it ain't over. So watch it. What you can do, 40% Bitcoin, 35% say Ethereum. I think your Ethereum portion will overperform, but your Bitcoin will lend you certain stability and the store value element. And then you can go 5 times 5 on Link, Dot, Ada, and Sushi, Uni, and you've got your 5x5s at 5%. So that's something for your blue pot for you guys to consider. It's an idea. Okay, so let's drop down the time frame and talk about it. Pop music, shooby dooby doobop. So that was a clear squeeze for us. Volume by price confirmed it as a major point of interest. This is technical analysis at its finest. We'll teach you how to use these tools, why, and etc. Anyway, so this is a continuation This too is a continuation. You've had a nice little break. That was a key inflection point, by the way, for your FBTC. You could have got in right there and you could have had a stop at the low of that candle. Now it's doing a little walk up now. It's not running away. And typically, technically, that's a bit of an upsided flag. It can be a bit bearish. So you might get a small dip if Bitcoin sells off because Ethereum will sell off a bit more. You might even do a return move to the 33 over here. Key level this was, neckline for that head and shoulders. You can see the resistance came in here, the resistance came in here, the resistance came in here. You know what I'm about to say next, don't you? And now you've broken it. What previously was resistance turned support. Those rules of support and resistance do hold. You may get a return move. It might be an opportunity to collect some cheap Ethereum relative to Bitcoin in the event of that little possible rollover that Bitcoin might give on the return move on the falling wedge that I've already covered. Okay, so with your FBTC, what of this going to 7? 6.6 is our target, a little bit of an overrun taking you towards 7. It may not make 7. What's going to happen with the others and the dots of this world? Maybe worth having 5% in the pot. They are now in the top 10. And of course, as I've already suggested, 3 other 5%ers could do you really well. Okay. I think I have told you everything I've told you. It's going to be a good week for crypto in my world view. But watch out for that return move on the gold and silver. Gold has a crappy open in the east. This is Sunday evening. There'll start to be some numbers out of Australia, Hong Kong, Japan, etc. Might be a bit soft. What happens? This visits down. Buy after just taking out the 3-3. You might not have to hold too long before it then winds up again, and then next thing you go, you're ready, steady, go. So when you break a key level, you sometimes have to come and kiss it once you passed it, and that's called a second chance and a return move, and off you go after that. So we are price behavior specialists with a forward-looking bias. We look back to understand what's happened previously so that we can best scenario cast probabilities and possibilities of what might come next. For me, Ethereum is an overperform to Bitcoin, which is back on the horse again in our worldview. And as it is the God market, it's required that it goes up. It's had its hangover cured now, and it's got a fresh pair of legs after that sell-off. I think you could roll over and do that revisit. It's starting to look like it's happening. I've already covered this. So buy limits could get you in a little cheaper. With that, I love you and leave you. That's my take. Bullish moves heading close to, if not through, 50k. So close to, meaning 48,000 new all-time highs. And with it, it will drag Ethereum, which we never actually looked just in the dollar terms chart, Ethereum to an all-time high. Let's just remind you that the all-time high is at the 1400s level. See if I've got the eye on with any levels. There you go. That's your all-time high over there at the 1440. I think this structure is positive. Note the steep upside support. A lot of grind buying coming in underneath this. Yes, it can exhaust. Yes, it can fall back sometimes. Just not seeing it if Bitcoin is going to push. You could see a little bit of a dip and a return to our red line and then a shove through the 1440. What will it do after the major new all-time high? Probably punish all the support and resistance traders that reacted to the headline and chased in. That's typically what it always does. So after a little bit of resting and coming back and crawling up, and then Bitcoin gets properly going, a run and a return move. And then maybe even a little pullback below, maybe a falling wedge before going higher. But it will punish those that chase an all-time high. So don't trade support and resistance in terms of entries. Your key inflection point opportunity in Ethereum, if you're trading Ethereum, will come in and around here. I will be doing the other coins like DOT and etc. with my community. If you want to see that analysis, you would need to be part of that. But I've told you where to look, and we've given you a little bit of an idea of where it's all about. I'd expect a nice opportunity for some sniper sites, key inflection points, super tight risk somewhere there and there. And you might be able to get away with nice tight stop, which for leverage trading you have to make sure you don't get washed out. And you could be in there, and you could get a very aggressive move to the upside, possibly even seeing numbers such as 1500 and going to 1600. All-time highs will get Ethereum news and platform across the board doing very well. With that, I say once again, grab the free stuff below, buy some bullion as well, use the Bullion Vault link. Thank you to the multitude of you that have in support of the channel. We value shares. We appreciate it if you share. If you make some money on this, good for you. And book a call if you want to be part of our active community. Until next time, I say goodbye, goodbye, goodbye.